Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings and unpack what it all means for the companies we invest in. Today we're looking at Aethlon Medical Incorporated. This isn't just another financial report, it is a window into their fight for survival and their audacious bets on the future of medicine. So what is really going on behind the scenes at Aethlon Medical Incorporated? This company is operating in the highly competitive and complex medical therapeutic space, focusing on a device called the Hemopurifier. Their latest quarterly report for the period ending the 31st of December 2025 paints a picture of a company in critical need of funding, but also one pushing forward with ambitious clinical trials and research. Let's start by looking at their financial health on the balance sheet. As of the 31st of December 2025, Aethlon had total assets of about $8 million, a slight increase from the 31st of March 2025. However, digging deeper, current assets mainly consist of cash. Their liabilities are notable, with total liabilities at around $1.3 million. The most striking figure here is their accumulated deficit, which stands at a staggering $173 million. This is the total amount of money the company has lost since its inception. It is a clear indicator that they have a long way to go to become profitable. Now let us look at the income statement. For the 3 months ended the 31st of December 2025, Aethlon reported a net loss of about $2 million. This is an increase from the $1.7 million loss in the same period in 2024. Across the 9 months, the net loss was $5.2 million compared to $7.1 million in the prior year. While the trend shows some improvement in reducing losses on a 9-month basis, the quarter-over-quarter performance shows a widening loss. This means their expenses are growing faster than their income, even though they do not yet have significant commercial revenue. Moving on to the statement of stockholders' equity, we see the impact of their financing activities. For the 9 months ended the 31st of December 2025, they saw significant increases in additional paid-in capital, largely from equity issuances totaling nearly $3 million from a public offering and warrant exercises. This is crucial for a company with such a large accumulated deficit. The number of shares outstanding also increased considerably, reflecting these capital raises. The cash flow statement is where the real story of liquidity unfolds. For the 9 months ended the 31st of December 2025, Aethlon used a whopping $5.2 million in operating activities. This is consistent with their large net losses. Investing activities used very little cash, which is expected as they are not building out significant new physical assets. The good news, if you can call it that, comes from financing activities. They brought in over $6.7 million in cash from issuing stock and exercising warrants during this period. This is how they are funding their operations and clinical trials. However, they clearly state that their existing cash is not enough to fund operations for at least 12 months. This means they are in a constant need for more capital. Let us dive into the notes to understand some of the key figures. Aethlon's core business revolves around the Hemopurifier, a device targeting cancer and life-threatening viral infections. They are pursuing clinical trials in Australia for cancer patients. The company highlights its breakthrough device designation from the FDA for 2 indications which suggest potential, but not guaranteed approval. They also mention advancements in preclinical research looking at extracellular vesicles, which are linked to diseases like cancer and neurological disorders. This section is critical. Management explicitly states there is substantial doubt about the company's ability to continue as a going concern. This is a formal warning that without new funding, the company might not be able to stay in business. They are actively looking for strategic options and financing, including equity offerings. This means investors should be aware of the high risk involved. Here we see the details of their fundraising efforts. A significant event was the December 2025 private placement where they issued pre-funded warrants and common warrants raising about $3.3 million before fees. This was accompanied by a warrant inducement agreement, essentially modifying existing warrants to encourage participation. They also mention a delayed registration statement for these shares which could impact investor confidence. The report also touches on stock option and restricted stock unit activity, which are standard for compensating employees and directors, but contribute to dilution. Warrants are a significant part of their financing strategy. We see a large number of warrants being granted and some being exercised. A key point is that many of these warrants are contingently issuable, meaning they require stockholder approval. This approval had not been obtained as of the 31st of December 2025. Which adds another layer of uncertainty. It makes you wonder how much capital they will actually raise if these approvals do not come through. Lease commitments are detailed here. They have leases for office, lab, and manufacturing space with a remaining term of about 15 months. These leases represent a recurring financial obligation. They also had a short-term premium financing agreement for insurance, which was repaid. Importantly, They state they are not currently involved in any litigation, which is a positive note in an industry prone to legal battles. Aethlon received a payment of about $218,000 from an Australian R&D tax incentive program. This is a welcome boost, reducing their reported research and development expenses for the period. It is good to see them leveraging government incentives, but it is a one-time injection of funds. The company operates as a single segment focusing on the development of the hemopurifier. Their primary internal metric for evaluating progress is not profit but cash used in operating activities. This is common for development stage companies, but underscores their focus on spending to advance their technology rather than generating immediate revenue. This section is a crucial reminder of the challenges. They are facing potential impacts from government shutdowns on regulatory agencies like the FDA, which could delay their product approvals. This is a significant external risk that could derail their plans. They also reiterate the need for funding and the inherent uncertainties of product development. This section reiterates the details of the December 2025 private placement and inducement agreement, emphasizing that these securities were sold in a private offering exempt from registration. It also mentions the use of proceeds for working capital and general corporate purposes, which is pretty standard Scrono. Let's put on the investor hat and look at this from a broader perspective. Aethlon Medical is a company in a high-stakes game. Their core product, the hemopurifier, has potential, especially with the FDA's breakthrough device designation. However, the financial reality is stark. Their accumulated deficit is enormous and they are burning through cash at a rapid pace. The fact that they are raising capital through warrants and private placements is a double-edged sword. It keeps them afloat, but it also dilutes existing shareholders and comes with complex terms and conditions. Like the need for stockholder approval for certain warrants, the going concern warning is the most significant red flag. It forces you to consider the risk of a complete loss of investment. On the other hand, if their clinical trials succeed and the hemopurifier gets regulatory approval, the upside could be substantial given the unmet needs in cancer and viral infections. Their preclinical research on extracellular vesicles also hints at future potential applications. But these are early days, and the findings have not been peer-reviewed yet. The company's direction is clear: push forward with trials, secure funding, and hope for regulatory breakthroughs. The weakness is evident in their financial position and the constant need for external capital. The strength, if it materializes, will come from the successful development and commercialization of their technology. The biggest opportunity lies in the potential market for a device that can remove disease-causing agents from the blood. The biggest risk is still the lack of guaranteed funding and regulatory success. From a Warren Buffett perspective, this is a highly speculative investment. It is a bet on a turnaround and the successful execution of a complex scientific and regulatory path. You are investing in hope and potential rather than current profitability. Alright, that is our deep dive into Aethlon Medical Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Are they on the path to a breakthrough or facing an uphill battle? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And be sure to subscribe for more deep dives into corporate finances. Don't forget to check out our Discord community linked in the description for more in-depth discussions. Thanks for watching. See you next time.